All right, good afternoon. Welcome, everybody. Wall Street Jesus here. Tuesday post-market webinar. Another interesting day in markets. When is it not interesting? With all the shenanigans out there between Powell running his mouth, negative China trade war headlines left and right, Pompeo getting on Twitter. You really can't make it up. You can't make it up. But who knows where we'd be without all this? We could have topped out ages ago and been in a disaster of a bear market. So the grass is always greener on the other side until you see what the other side looks like up close. So we can't complain. But if you guys, just to refresh, because anybody who may be new to the webinar, maybe wasn't aboard last week in what we were talking about, to put it as simple as possible, okay? I want to give you guys an example. I remember it was around like 2015-ish. I don't know if a lot of you guys know this, but some of you may not. I pretty much punted swing trading. Like I was primarily a swing trader early on in my career. Hardly did too much of any day trading. And then I think it was around probably going into 2015 where the flow was so awful, the price action, it was just obviously awful. Okay. It was just a bad time. The flow wasn't anything to be impressed about. And it just, in simple English, I just came to the realization that the risk of building positions, okay, the risk that comes with it, the reward just wasn't there. Okay. Anything I did make money on as far as swing trades were concerned were things I got out of quick before they ended up rolling over. All right. So, and the reason I bring that up, since I think it was Bazooka Joe 2016, when I really started to get back in swing trading again. A lot of you guys know this from the steam room. Since that Bazooka Joe bottom in 2016, I've been building positions again as far as swing trading is concerned. And, now we're reaching a point, probably I would say from the summer to where we are now at this point, where it's getting to that again, where, it's almost like I have to try to make the best of the sweeper activity. Like I'm almost exaggerating the quality of the sweeper activity to make it swing trade worthy. All right. When I start to realize this, that's when, you start to reevaluate and you say, is it worth the risk of holding or building a decent sized position and holding it through a mess like we're seeing where nothing's going anywhere? And all you got to do is take a step back. We've been talking about this a lot, obviously, in the room, on the webinars. We spoke a little bit about it on Twitter yesterday. It's pretty clean, cut, and dry what's going on and what's been taking place to this point, okay? The only trade out there that has a favorable risk reward as far as overnight risk is concerned is catching that squeeze off sentiment extreme. That's it, all right? And there's a lot of factors, even more so now than there were, years ago, that play into it, okay? But for those of you who may not be familiar with it, pretty simply put, here's what goes on, right? You get some noise, you get some negative headlines, trade war economically, the Fed, whatever it may be. Bears get riled up, price action gets really weak. You see some acceleration, velocity in the selling, okay? All of a sudden, you look at the sentiment readings, they all get to extreme, put the calls are at extreme, everybody's bearish. Lo and behold, out of nowhere, the market finds buyers, okay? And, you get a squeeze over the short term that rips their heads off, all right? And if you weren't ready for it, even if you weren't shorting, if you weren't aware of where that might take place, right, where the probability of that goes higher and you got to get ready to catch that, you'll miss it. That's how quick it is. All of a sudden And I can't blame you if you're comfortable chasing in this mess. All right. But other than that, meaning, we've come percent off the highs, 10% over the course of a month. The squeeze could be that much more powerful and last longer. Okay. So the longer the drawdown, the stronger the squeeze. Okay. But once those bears and once those shorts and once those CTAs and all these quants and all that positioning get squeezed and unravel all that bearish positioning, what we're left with are no real buyers. You understand? So, in other words, you come from the lower end of the range, right? You squeeze over whatever period of time to near the upper end of the range. And now, obviously, shorts don't have to cover anymore. All that disaster protection, crash protection has been unraveled. Now you need fresh buying to come into the market to propel it higher. Okay, institutions, hedge funds, wherever it may be. It doesn't exist. All right, and it's been the case for a while now. Right, you see it all over the place. I mean, Bank of America Merrill Lynch, has a lot of sentiment indicators based off fund positioning and stuff like that. And the only thing they're interested in, right, funds, bond proxies, utilities, and all the defensive stuff. All right. So when that's going on, when we're in the midst of something like that, okay, it's good that we get these type of drawdowns and these type of little vicious sell-offs over the course of whatever it may be, even the course of days, because that squeeze is where your best entries are going to come from. Okay, where if you, I don't know if you've been taking notes or writing in a diary over the past, I would say at least a year, if not more than that, the majority of, or I should say the best winners you probably stepped on, the likelihood is they came off the initial squeeze or the early part of a squeeze. And the stuff that you lost money with, the losers are usually names that you got caught in a drawdown like we just saw today. All right, so that's where we're at, and we have to acknowledge that, because if you got to reach a point and say, listen, if that's all the market's willing to give us, right, we may not like it, we may not enjoy it, we have to at least prepare for that. We have to look to take advantage of that. And like I like to tell you guys, entertain ourselves, figure out a way to keep ourselves busy in the interim, because that's where the bulk of our P&L is going to come from. No matter what you like to trade on the equity side, whether it's SPY, ES, or individual names. All right, and I say, listen, we could all get lucky in individual names. You can buy one late in the rally, and that ends up exploding from there. All right, but I'm talking about consistency now. The majority of your profits in an environment like this are going to come off a sentiment squeeze regardless. All right, and not only based off the price action am I making comments like this, I'm talking out of the flow too. And I don't know if you guys have realized this, because I've obviously been watching the flow a lot longer than you guys have. But you can see, if you're looking for, you can see that when the market squeezes, right, and prices start to rally, you see a good amount of call sweepers, right? And I talk about that pace. You see, call sweeper after call sweeper after call sweeper. You see action on the call side, okay? And then as the rally teeters out, right, as sentiment gets back to neutral or even beyond that, put the calls get washed out, call sweeper activity dries up. And then as soon as the markets start to experience some selling and roll over, we see some put sweeper activity, right? And then in the interim, you're seeing just smaller players and short dated stuff just playing off the momentum. You see an intraday squeeze, you're going to see some, some guys sweeping weekly calls, right? The markets start accelerating to the downside on an intraday basis, you're going to see them sweeping weekly puts. All right, so we not only do you have to be aware of that, because obviously a lot of you are members, that's not your job to be aware of that. It's my job to tell you about that. That's what makes you aware. But you have to at least acknowledge that. And no matter what style you may trade, you have to incorporate that into your style. Audio's not working for who? I see a couple of people saying audio issues. But this happens every webinar. There's a couple of people saying audio issues. Everybody else, JO, is saying it's fine. It might be on your end. Yeah, sometimes some people hear it, some crackling. Sometimes, it's others. I don't know the reasoning behind it. But the majority of people are saying audio is good. All right. So here's an example. Okay, and just like last Tuesday, if you remember. So this webinar lined up pretty good. As far as timing is concerned, okay? Today, we got selling. Let me put up a daily so we could see it better. All right, so today we got some selling. Tomorrow, we're going to come in. I don't think I'm exaggerating here. I like to wait for confirmation with the sentiment indicators when they update tonight. But for the most part, we're going to come in tomorrow morning all set up. Okay. So what we're looking for now as we head into tomorrow, we're looking for signs that sweepers are positioning for that sentiment squeeze. Okay. And a lot of times what the initial signs of that will show up as not a barrage of call buying, okay, but a small portion of aggressive activity in a bullish vehicle. So in other words, what I mean by that is you guys saw there was I think a SPY call buyer today, right? And a QQQ call buyer today. All right, but it was one order and then you never saw it again, right? You never saw another SPY call buyer for hours. We saw, SPY put buying actually. So the difference would be they come back and they hit that line. The market's selling, they hit it again, right? The market continues lower, they add to it again. So that's a sign of commitment. That's a sign of a professional out there who knows a lot more than you and I for the most part, okay? That's giving us a heads up that the probability, the odds of now a squeeze based off an extreme here is going to show up sooner than later, okay? And, other signs we talk about all the time, right? Leveraged ETFs, right? We'll see them buy TQQQ calls or VXX puts. Those are the things that stand out that look a lot different than what we were seeing today. Like you saw what we saw today, okay? A ton of block trading, which you guys should know by now, completely useless, especially going into earnings, completely useless, completely. As much as you want to get bulled up on a stock or bared up on some puts on a stock, please do me a favor. When you see a block during earnings season, flush it down the toilet. Useless. Okay. The majority of times it's tied to stock or on the call side, replacing equity into earnings. So that individual player is taking off risk, not putting on risk because a little birdie told them the name was going to announce a good number. All right. So it's the complete opposite. All right. But that, if you want to know, like today, for those of you members, why the flow just didn't cut it today, it was for that simple reason. Any decent size was tied to earnings, and everything else was hit and run, one sweep, small in size weeklies, and that's it. So the flow was awful today on the call side. Awful. And to tell you the truth, even, the put side got quiet in the middle of the day, and hence there was a decent squeeze. Okay. But, without any call sweeper activity behind it, from my experience, this thing's not going too far. That's why I don't get pissed off if I miss it, or licking my chops if I don't see sweeper supporting it, because I know there's not going to be a significant rally, a significant squeeze without call sweeper participation in a pretty decent way. That's from my experience. So that's why I hold out and wait on that. The issue for me becomes, like here, for example, like this could have been played. I know a lot of you played it. I didn't play it. I'm being honest with you. This could have been played because you could see the flow, right? Put sweepers were drying up. We spoke about that, right? We saw the put sweeper activity that came in off the open pretty much dried up. And there was some small bull flow starting to creep in. Okay. So you could have very easily said, all right, I'm going to hop in some ES here with a stop, see if I can get at least a quick trade out of it, raise a stop along the way. The problem is when call sweepers aren't aggressively coming in to that squeeze, from my experience, I never could get a gauge on the lasting power behind it. All right. So I don't know if it's this, like a squeeze like this, and then rolls over, right? Or it's something that lasts, like this. So again, from my experience, the majority of the stronger squeezes are usually the ones call sweepers get behind. That's why I at least like to see some signs of aggressive buying before I participate in a squeeze in a climate like this. All right. But again, bottom line, all right, it's pretty simple right now what the market is giving us. Okay. There are no signs. We've been talking about this for a long time. There are no signs yet from the stuff that we follow, okay, that there's a whole huge bull market coming out of this in the not too distant future. Call sweepers are loading up on SPY calls, even as the market's chopping around here. There's none of that. We're not seeing rotation, what we wanted to see, right? We're not seeing that. We're seeing selective buying, and the bulk of it coming off the start of a sentiment squeeze. All right. So what that's signaling to us, right? If you have high confidence in these signals like I do, what that's signaling to us is to try to do the same. Try to do the same. Okay. If we're all degenerates, if you can't find a way to keep busy in the interim, make sure you size down enough that where at least if you make a nice hit off the sentiment squeeze, you're not giving it all back in the mess in between, because that's what it is. It's a mess in between. It's a complete guessing game. I don't know about for you guys, but for me, it's a complete guessing game. Right? And you've heard me say this a lot too. Like in individual names, it's not just recently. For a while now, I'm lost in space. I have no idea what's going on out there right now. No idea. Okay, I don't see anything out of flow. Are they rotating here? Are they rotating there? Are they going into cyclicals? Are they buying the software names on the dip? I don't see, there's not a clear picture anywhere in individual names. The only clear picture I see is the positioning for the sentiment squeeze, and that's it. And I've seen this story before, I've seen this story before. Yeah, and that's a good example, like Ani's talking. Okay, you have SE, which clearly is seeing buying, right? Okay, there's definitely buyers in SE. Okay, that's pretty evident. But there's not buying in anything else out there. Okay, so you're asking a lot if, and forget what they're doing, because they're a whole different animal. Okay, because what they do, we've seen it time and time again. What they do, they can buy and roll down strikes and do what they need to do to stay in the position, even if it goes against them. That's not what any of you are looking to do. Okay, and to be honest, you don't want to do that right now. Okay, you're not running fun money. You can sit in cash if you have to. That's the beauty about trading your own account. There's no have tos. Okay, for them, they need to put money to work. A lot of times they have to buy something. Okay, but the point I'm trying to make is, like SE, there's clearly buying in it. There's no doubt in my mind somebody likes SE. Okay, the problem is SE is not going to new highs, okay, and going to run by itself while a market is under pressure. And even more importantly, the sector is seeing a good amount of selling. All right. So think about that. And we spoke about this, right? That's the difference. There's nothing wrong with taking a shot on SE Jan calls. There's nothing wrong with that. But what I'm saying is it's not worth building a position in it, sticking your neck out when there's a lot of other things going against you and you need a lot of luck into the equation, right? You need to get lucky. So what's got to happen is, if the market's under pressure and the sector's under severe pressure, you're going to be in the one stock that rallies. Okay, is it possible? Yeah. But this game is about probability and odds, right? The odds are that's not going to happen. And, Trey, you bring up another name like Roku, okay? That's what happens. People will look at a Roku, and as it's running higher, right, even though everything else in the market looks like crap, they want the next Roku. They think they can get in another Roku. But meanwhile, 80% of the rest of the market, individual name-wise, is struggling. So exactly. So that's why, look, and a lot of you, maybe you can't day trade. You really, for day trading, it's tough to be a degenerate in day trade, okay? Because you got to take what the market's willing to give you. You can't get greedy. You got to look to lay down bunts, bunt singles, have them add up. You have to learn how to take losers. You can't expect to hit everything you buy as a day trader. A lot of losers are part of the game. It's normal. So if that's not, if you're not cut from that cloth, that's okay. You're going to be honest with yourself, and you have to sit and wait for the sentiment squeeze setup. Okay. And let's say you're early one time, right? And you're underwater, and then the squeeze comes and you didn't make much money, or it's a small loss. You don't let that affect you. Okay. You got to take a step back and look at all the sentiment squeezes we've been seeing right now, right? Or throughout the course that you've been following sentiment, all the squeezes that have come off sentiment, and how many profitable setups have been generated to, setups where you took scratch trades or losses on. That's the way you got to look at things. All right, but that's if you don't want to day trade, right? If you can't just keep yourself busy day trading, trying to make a couple shekels in the interim, there's nothing else out there, in my opinion. There's nothing else out there. Okay. Just quickly, we also spoke about, I told you guys how I wanted to do it. I want to eventually build a basket of all these cyclical type names with a lot of time behind it, right? And build a nice basket, leave it alone, add to it on weakness, and build a nice little account like that. But I need to see signs of the smart money doing the same. I am not going to take the initiative and do it on my own, because I've been down that road before, and I've gotten lumped up way too many times. What the hell do I know about a possible rotation, right? I'm looking to fade people like myself of what they think they know. So, Trey, what I'm hoping for is like if we see them come in and start hitting Caterpillar 6 months out, okay, the way they should hit like Caterpillar, I'm thinking about even going further than that, so I can be more patient. In other words, I'm not looking to sell at the first pop. You understand? Or if I'm early, you don't panic. You look to add. You want to be early. You know what I mean? So you can continuously, little by little, add up. And that's what, I don't know if you guys saw the McElliott note today, Charlie McElliott from Nomura, but that's what he's saying is the biggest risk reward trade out there. Okay, there's not much, just like we're talking about, but eventually it's going to be all these names that they're just getting, there's nothing priced into these names. Yeah, he's talking about basically that rotation trade. So he's saying that, you know, in what he looks at, the options, the gamma, all that stuff, there is nothing positive being priced into those names right now, further out in time. Okay, not a shot of a trade war resolution, not a shot of an economic recovery. No, the cyclicals, Ani, the Caterpillars, United Rentals, all those guys. So that's what he was talking about today, you know. And you remember he was on Real Vision talking about the same thing we're talking about, building a nice account, building a little portfolio, and going out. You saw that? Is that crazy? Ani's talking about this chart here. So, and here's the thing. I think, Ani, and you know, we've spoken about this before. I think we need this trade, Ani. I don't think we're going anywhere. I think this market stays like this until they're ready to rotate. Unless we get a decent flash crash where they knock the shit out of some stuff. Excuse my French. You know what I mean? I don't see any other way this plays out. This is you know, this has got to unwind here. It has to. They've been plowing into defensive utilities, bonds for a long, long time now, and they've been selling these things for a long, long time now. They had this at some point. This is going to flip. You know, we spoke about this. I feel like I don't even want to talk about it anymore, Tree. You know that? I don't even want to talk about it because I'm so sick of waiting for it. Now, it's almost like, you know, when something's coming up, you don't want to talk about it because it takes so long for it to come around. If you don't, it sneaks up on you, that sort of thing. I'm like a little kid around Christmas. So, but, you know, that I think, again, I'm giving my opinion. I don't see this market getting on legitimate footing, like a full-fledged uptrend bull market, legit, healthy breath behind it. You know, you can be a stock picker again. You can look at names. You don't have to panic and sell, because if you don't, they're going to roll over and you're going to get hammered. You can buy stuff with time. Who the hell wants to buy anything with time over the past 6 months? The worst thing you could do is buy with time. The longer you held it, the worse you were. You know, that's how bad it's been. But that's eventually, I think, what has to happen. And then everything I'm complaining about on this webinar will start moving in the right direction. But in the meantime, I don't see it. I don't see, again, we're talking risk reward here. You can get lucky and step on a winner. You know, you could step on a big winner. You need a lot of luck, is what I'm getting at. The risk reward is just not worth sticking out your neck on a position, you know, off anything we're seeing right now. All right. So that's what we're waiting for. Okay. The other option, like we spoke about, is some sort of, we were talking on Twitter yesterday, a 2011 type event or 2010 type event, flash crash, where they really beat the hell out of some things and knock them down enough where the rally back is legit. You understand? So it's not just a squeeze back now. It's a rally that's going to last over the course of months, and there'll be some decent swing trades out of. That's the other option if there's no rotation. But we spoke about that a couple of times, right? I think they need to get hit even harder than they did already, a lot of these things. Yes, it did. That's everybody rebuttal to me, Tree, that it happened in December. But people don't realize corrections used to come around often. Legitimate corrections used to come around often. Like you hear people talking about 1998, Tree, how it's similar. 1997, there was a vicious pullback in 97. And then another one in 98. And then another one in 2000. So it's not like these things have to be spread out over years. Normally these things show up, at least once a year, if not more than that. So, but again, you might as well wait for the evidence and see which way they go. Right now, they're not doing anything. They're not doing anything. Okay, as far as I'm not seeing any clues that they're rotating like this, or they're doing the opposite, and where they're going back into the software names hot and heavy. They're trading, they're playing. All right. So anybody have any questions? More importantly, I wanted to discuss the setup going into tomorrow, because that's where we are right now. Okay. And I feel like, again, I use this term a lot so you understand what it means. I think we're there on enough of the sentiment stuff we look at to keep a close eye on the flow and look for clues out of the flow. Okay. If we're not seeing any evidence from sweepers like today, I think tomorrow, if they're selling, you allow that selling to work itself out, and then at some point in the afternoon, you're forcing, you know what I mean? You're forcing a SPY bet type of thing. Oh, geez, Wes, are you serious? All day tomorrow? You're not going to be around? That's your luck, right? Hopefully I can hold it one more day for you, Wes. Maybe I'll try to hold them down one more day for you. All right. The other thing too, okay, that I want you guys to understand, because we've been talking about it even more so now. I don't like to talk about it too much because it's confusing already. I confused enough of you with the McElliott stuff. I confuse myself with McElliott. But you sort of like the squeeze today, Gamma, right, which we look at on an intraday basis. Now, Gamma came back almost to pretty much flat from the lows, okay? So the other thing we want to keep an eye on in this environment, more so than any other environment, when we're playing for that sentiment squeeze, we want Gamma to be juicy. You understand? You want a decent negative number off that Gamma reading. And the reason why is this: even if you're early, okay, so here's an example. Tomorrow we're a little weak, right? And we're looking for an entry there, okay? If we have, right, the Gamma reading is negative 1 plus, God forbid, approaching a 2, that tells us that even if we're early here and there's additional selling, which is totally normal, we can't be afraid of that. We're going to nail exact lows every time? That's not feasible, okay? But what the Gamma tells us is that when that turn comes, it's well worth it. The squeeze is going to be well worth it when they flip. You understand? So that's why I feel like, especially in this environment, with the stuff we look at on the sentiment side and on the sweeper side, it's important to keep an eye on that gamma number, because that gives us an idea of the risk reward on that sentiment squeeze. All right. If the gamma number's flat, maybe it's not appealing. All right. Maybe you're not looking to get in just for a quick squeeze and get out. All right. So that's generally what we're looking for. When we have sentiment lined up, we have gamma where we want it. We're into sweeper activity out of desperation for some clues. We're looking for early signs. You understand? When we have sentiment and gamma in our corner, we're looking for early signs from the sweeper crowd. Okay? If you don't have those two in your corner, then you want to see legitimate signs out of sweepers. You're not looking for early signs because you might be too early. Yeah, it depends. C-Train, it depends on, I guess, what you're looking for. Like, I know a lot of people play weeklies if it's early in the week, or even bi-weeklies. I got a couple of buddies of mine that go 2 weeks out, and they've been killing it. They go 2 weeks out. They don't want to dish out a lot of premium, a lot of wood. So they're not looking, to put up big money. They're looking for that big risk reward. And they've been killing it. Because why, C-Train? Because the calls are cheap and the squeeze should be worth it when it comes. Okay, so it's about what you feel comfortable with. Like, me, I'm a little more conservative, and I sometimes I go out a month and stuff like that. Meanwhile, I'm quick to sell it anyway, so I don't even know what the hell's the matter with me. But it's whatever you feel comfortable with. I also like C-Train. What I like to do is I go out a little bit further, and what that allows me to do is, let's say I'm a bit early and there's weakness, I can add there too. You know what I mean? I can add to it, or even play another line. I got some room, So that's why I'll do that a lot of times. Yeah, Ani, that's a great, right there. You're doing stuff more prudent, better than 90% of the people out there. Ani's saying, like, he's not even an option player, but the only time he's going to play options is when gamma and sentiment are at extremes. And if you can handle that, Ani, you're going to find some success. You're going to find some success. I told you, I got, again, like a buddy, colleague of mine, but people I work with, that they don't even, all of us like to overanalyze things. What should I buy? When should I buy it? I got a buddy of mine who he don't even think. Sentiment is there, and he's got the gamma confirmation. He's just buying out of the money calls. He doesn't care. That's what his interpretation is. When sentiment gamma get to where he wants it to, he's just looking to buy out of money calls. He may win this time, he may lose this time, but he knows he's going to have more winners than losers, and the winners are going to be decent when you nail some of these squeezes. And the options are perfect for it too. You understand? Because here's the thing, options. Let's say, you run into that one time that there is something cataclysmic, right? And shit hits the fan. In options, you only lose what you're putting up. All right? If you're going in and you're gobbling up equity and you're putting a lot more principal at risk, it's hard to really manage. Exactly, honey. It's a bet. You put in what you're willing to lose. That's, if you can take that approach in options, that's a start right there. Yeah, and Joe, you can see, right? There's without a doubt we can make the claim more winners than losers, and there's some big winners. Now we got trouble hanging on long enough. That's our problem, right? but you could see how, some of the decent sized winners are going to more than make up for whatever potential loser you'll have. So that's the way you got to look at it. That's the be good, Ani. So that's the way you got to look at it. So that's how we go into today. So if those of you who aren't members of the Steam Room, okay, what you would look for on my personal Twitter tomorrow, if we have some weakness, look for me posting call sweepers. That's how you guys on the Twitter who aren't members get a general feel of sentiment. If I'm posting charts, like I said today, BAML research charts, right? And I'm not talking about sentiment, there's something wrong. There's nothing bullish going on. But if you see me posting sweepers, and I sound giddy about it, you guys know what I'm talking about, right? I'll be like, oh, IWM, some size coming in. And you guys don't even, listen, if you're not Steam Room members, obviously I'm not giving all you the details of the positioning out there. I mean, for Christ's sake. But what you should be doing is utilizing my regular Twitter feed for sentiment. So if I'm talking about bull sweepers coming into certain aspects of the market, that's where you got to do a little homework on your end and figure out how you may want to take advantage of it. All right, so and we don't even need that much weakness tomorrow. Okay, flattish, soft open, maybe we're green and then we turn red. That could very possibly happen. We've seen that. My personal Twitter is Wall Street Jesus. How'd you find me without Twitter? Facebook? How'd you find me without Twitter? I don't know. You got the email. I got you. All right. Yeah. Here's the best way. Oh, you guys, look, you may be right. It's telling me I'm experiencing audio quality issues. See? I'm knocking you guys. Meanwhile, you're right. Here, anybody who has any questions on anything I'm talking about here, go to wallstreetjesus.com. WALLST, Jesus.com. All right, and you'll get everything on there as far as information. Last question. Should we concern Mock continues to be to the sell side even with sentiment lining up? No, a lot of times Mock will be lining up with sentiment extremes. In other words, you'll see a big amount of Mock selling, Cole, and that usually comes when we start to notice it. It comes at extremes, and then it turns. So the best way to pay attention to the Mock is when you start to see things look different. In other words, they're buying the close, all of a sudden that starts to dry up. You understand? Or they're selling the close, that starts to dry up, and now they're starting to buy the close here and there. That's the only value out of Mock that I've learned. Yeah, exactly. Change in trend. Exactly. Day trading in this brand, I'm not going to lie to you. I've been spinning my wheels. I had a great week last week, but again, I told you why. Because of the squeeze. Other than that, I'm not doing much at all, Brant. That's the whole point, But here's the thing too, okay? I'm not even playing the downside. I don't play the put side intraday either. So on a day like today, I'm not doing much, if anything. You understand? So that's a big part of it. But I'm being dead straight with you guys, okay? This is where I make my money. Sometimes I make sometimes I make a decent dent. Sometimes I'm frustrated I didn't make enough. But in this environment, pretty clear to me that this is where I'm making the bulk of my money. What I'm hoping, everything I'm doing around that, at best, evens itself out, I kid you not, if it evens itself out, I'm a happy man. Yeah, Trey, and that's what I mean. You nice and easy, right? You make sure you try not to get greedy. Make sure you limit your downside. That's the most important thing. And just be realistic about it. You're trying to grind it out and make some money and wait for that better setup. Wait for that better setup. All right, because I'll tell you this too. If let's say we hang out down here, right, without some big squeeze, this is going to set up a really nice rally out of here if we get that. Like, in other words, weakness, and instead of squeezing hard back to top of this range, we're hanging out down here. Like, you're going to have a lot of bears reeled in to where this, can get really going there. So we're at a decent spot here. The tough part is we got earnings to navigate, but we're closer to bearish extreme on the sentiment front than bullish. You understand? We're not up here. Here we had some problems, right? We knew that this may be a while here. That was the problem up here, right? That's why we can't buy up here and get stuck, because if you get caught in this, you're done, no matter what you got. All right. Now we're in better shape down here, that even if there is further weakness, the likelihood is that's going to translate into a big sentiment edge. Yeah, that put the call was weird today. I gotta look into that when all the rest update, because that was strange today, that put the call. I have a better chart that you can really see how it played out. Hold on, does this one show it? No, not really. It didn't show it. This is a different put the call though. It didn't show it. But this, I don't know how that played out like that, because I didn't see it on anything else. And look, what's amazing? It's amazing how, they find a way to squeeze them, and then once they get them out, right, that's when they let the market unravel. Yeah, and that's the other thing too, is like this trade war thing's been hovering over us for a while now. Eventually the market's going to get used to it, you would think, but the market getting used to it, maybe this is that. It's not like we're crashing. We've just gone nowhere for the past couple of years. It's been a big range. But if you buy at the top of the range, waiting for that fresh buying to come in, there's a lot of pain there. So that's why you got to wait for the selling, and that's where you got to do buying if you're looking for positions. No, the headlines now, we are worse, obviously, than ever before. But trading's never easy. It's never easy. See, a lot of people I know look at this environment as a better environment, believe it or not, because at the extremes, that's where the trade is. You understand? So if you're a big, like for me, I hate chasing. Okay, if you don't like to chase, or you don't like to short in the hole, this market is not a bad market for you. You understand? Because you're getting, like for example, you get these headlines, even day trading, where you get the fades or the sell-off, and you can look to buy them. It's when you're selling right here and you're buying up here, that's where you get into trouble. Exactly, Tim. You need patience. But for investing, this is a tough environment, For investing, this is a frustrating environment, because every time you feel like you're making some headway, you're back to where you started again, It's a tough environment for investments. But for active players like us, and if you're new to trading, I think this is a great environment for you. Why? You learn some of the most important things. Like I told you guys, I got into the game 97, 98. So I had to learn some of the difficult things immediately. Immediately. There were no surprises anymore. When 2000 rolled around, yeah, it was a big .com disaster, but I wasn't taken off guard, surprised by it after some of the price action I've seen before. So if you're new to the game, don't get frustrated, because this is a great time to learn a lot of stuff. Because then in bull markets, you know what you need to do. But you got to be able to survive, this type of stuff. You got to be able to survive different types of markets. You see what happened to a lot of people in 2017? Anybody who started trading back here, they're probably not even playing anymore. Anybody who started trading in 2017 probably ran out of cash, because they didn't know what the hell a down market was. Yeah, you learn a lot. And that's the thing you got to realize. There's different market environments. The ability to realize what type of climate you're in and adjust to it is what makes a big difference as a player in this game. Like we're talking now, right? Like Tim is pointing out, right now, it's at extremes where you need to make your money. So the ability to acknowledge that and avoid, getting stuck in the middle and getting lumped up, that's what's going to differentiate yourself from most of the others. Who? Oh, Rambus. Yeah, Rambus was an animal back then. It was craziness. But, the retail investor got trained back in 99 that every dip was bought and stocks would just go to new highs. And that was the case on every dip, no matter how scary it looked. And then 2000 rolled around. But like I said, it's deceiving, because 2000, after that initial pull in 2000, there was a ton of money to be made off the rotation tree, a ton of money. So 99, in my opinion, the rotation that followed after 2000 was even better than 99. 99 was scary, because it was like playing musical chairs. You didn't know when the music was going to stop. You knew it was out of control. You had companies saying they sold fragrances, and now they're selling perfumes online. They built a website, and the stock would be up 40% that day, just based off they built a website. It was stupidity. Exactly. So you don't even want that. Right now, the thing to root for, like I said, guys, the realistic thing to root for is that rotation we looked at. There's going to be a lot of money to be made off that thing. A lot of money. When it comes, God only knows. But there's going to be a lot of money. You just got to be patient and try not to get too frustrated. All right, guys, I'll leave you to your evening. Go relax, get some dinner, rest. Tomorrow, flattish week open. We're looking for sweepers to give us some clues here that we got a squeeze in place, and maybe we get a little more gamma help, and away we go. All right, and like I said, anybody new on here, if you go to wallstreetjesus.com, you got a lot of information on the majority of stuff we spoke about here. You could take a peek. All right. And we also offer a 3-day trial to the room, no credit card, if you're interested in checking it out. Gamma, you could get it from a couple different places. Squeeze Metrics is probably the most popular place where they break it down for you. Google it. You'll find it, David. It's pretty, it's not, it's known now. Gamma's a pretty important piece in this market right now. All right. Have a good night, everybody. Good luck the rest of the week.